so tired.
Anticipate what we can expect, what it's going to mean for the entire German economy.
It is a monumental shift in modern thinking for Germany and basically all of Europe. The incoming leader of Germany has proposed, and is likely to get from the parliament, unlimited spending ability on defense. You know, a year ago, unheard of that this would be possible. So if they go from 2.5% of GDP, where they are roughly now, to 3.5%, that's another $45 to $60 billion worth of spending from Germany alone. That's why you see the defense stocks there rallying, some of them up more than 100% year to date. And based on what we saw coming out of Europe yesterday, you could see all the other countries do the same thing, which means a massive amount of increase in spending from Italy, from France, etc. This is driven by the fear that the United States is no longer going to necessarily have their back when it comes to
They didn't
defense.
step up for Ukraine, did they?
So that's the thing that they face right now, right?
Kind of, this is the moment.
Telling
This is
Ukraine,
we're
Did-
going to do
did-
whatever you need.
They said, I thought they didn't arrive at an agreement, and my people say they got stiffed. In other words, supposedly the EU was going to say, okay, the United States is out, let us handle this, and then they were like the gang that can't shoot straight. Are they going to back Ukraine and give Ukraine what it needs? Because $50 or $60 billion, Ukraine will blow through that in a year.
Yes. No, that I understand. Well, France and the UK have committed to boots on the ground. I think that statement, and when you talk specifically about the stocks and what it means for the markets, that suggests that there's going to be a sustainability and a spending commitment, for sure. They don't have enough right now, of course. I mean, that's why Ukraine happened, right? Because they did not show deterrence against Russia. If they had been spending all along, it was far less likely that Russia would have invaded Ukraine, right? And I think they all realize that now, and that they need to be doing more about it.
What does this mean for Germany's, let's start with, economy overall? Just in terms of, it's not just defense spending. These are other areas that they're going to start raising their spending on, too.
Yeah, he's also asked for a commitment to $500 billion of a special purpose vehicle for infrastructure. Remember, they put in a law during the great financial crisis and said Germany could not have a deficit larger than 0.35% of GDP. Compared to the United States, where we're running at 6%,
yeah.
right? I mean, it's huge. So that has really constrained their spending. They've got very high levels of social spending. So they couldn't spend on defense. They couldn't spend on infrastructure. Their trains don't run on time. They don't have 5G deployed across the country, right? They don't have fiber optic cables deployed across the country because of this. So now, as a result, they have now a more pro-growth attitude. They've got to implement it. There are some challenges, but certainly the market's acting like they think that this is
With
going to
NATO,
happen.
they were counting on us, and
Yes,
that's
they were.
part of the problem. That's part of the gripe that President Trump has,
Yeah.
is that they got to spend on cradle to grave, social
Welfare.
programs, because I said something yesterday on Twitter. Plus, we're subsidizing innovation in pharmaceuticals.
Right.
Plus, we're subsidizing technology. So the United States is subsidizing everything, and they're spending, money on, child care across the board or
Yeah, that's
whatever.
why
they
it
do.
irks the president,
Right.
why it irks a lot of people, exactly. So now they're going to have to make harder choices about what they're going to do. with their spending. So they are going to have a reckoning when it comes to social spending.
We did all that and still grew our GDP 40% faster than
Right.
most
I would say
European.
the one other thing that's going to hold back Europe, if they can't change this, is their attitudes towards regulation, right?
Right.
Because the one thing that they are number one at in the world is regulation. Take a look at AI, for example. You know, here we are, we're going to let AI rip. What's the first thing that Brussels thinks about when it comes to AI? Regulation. How are we going to? They don't even know what it is yet. They don't even know what its impact is. So that's going to be something that they have to change as well. But don't underestimate how monumental an attitude change is happening there, driven by fear. And to see the incoming German chancellor likely say, okay, we're gonna pass an amendment to the Constitution that allows unlimited spending on defense. That is a change. That you should not.
That's all we
discount.
need. Germany arming up again. That's all we need.
Well, what do you want, Joe?
No, I'm
you want
kidding.
them,
I mean, you know.
you want us to defend them, or do you want them to defend themselves? I mean, you're gonna,
Defending yourselves and then the next step.
remember, Japan made this transition as well.
I remember. Yeah,
right?
they were
So
not
here we
either
are.
for a while. Well, it's a dangerous water. What disturbed me today was reading the latest comments out of Russia. Now that they got Ukraine right where they want them, they're not going to give anything up. They're not going to concede anything, and they're saying that. Especially if there's boots on the ground from Europe, they're not going to give back. It's going to be very difficult to negotiate anything out of Russia at this point, given that we've shown our hand more or less.
Yeah, I wonder if you could think about it another way, which is, the administration could turn to Russia and say, wait a minute, we've given you everything you wanted, and yet you're still not going to
Like Putin cares.
strike a deal?
Right.
Oh, but then you have carte blanche to do whatever you want, right?
But does that mean we're back in as a result? Like you're not going to come to the table?
I mean,
We
it
don't
could
know
be
those minerals, we're back
escalation
in.
of sanctions. It could be all kinds of things, right? It gives if they give Russia everything they want, Putin everything he wants, and he still doesn't want to do a deal, then you have carte blanche to take whatever measures you want
Again,
against Russia, right?
But you don't think he's going to do? He doesn't want to do that.
I don't think he does either. But you get to that point, that's going to be a very interesting moment. If he doesn't give in, if he doesn't strike a deal, Putin I'm talking about, then we're in a very different.
One last question for you.
Yeah.
What do you think the chances are that banks in America have branches in Moscow in the next 4 years? No joke,
I think it's pretty high. Yeah.
right? I think it's very interesting.
Who's
Just
not
think
there?
about that. Think about that a little longer.
I don't think it's
folks.
just. I don't
McDonald's
think
isn't
it's just banks.
there.
I think it's. I think
No, I know.
it's
I
just
think that a
banks.
lot of
it's
American companies may
some
ultimately be
consumer
back in
products
Russia.
companies that had to give up, their plants, et cetera,
Yeah.
their production. Yeah, exactly.
Michelle, thank you.
You bet.
Good
It's
to
a
see
pleasure.
you. Yeah, thank you.
Okay, coming up, a light show in the skies over Florida. Though this is not necessarily the light show you want to see. It's the latest SpaceX launch and a partial failure. As we head to a break, check out crude prices. In a speech yesterday, Treasury Secretary Scott Bessent, who's going to be with us in just a moment, said the U.S. is deploying sanctions against Iran designed to shut down the country's oil industry. The Secretary will be with us at the top of the 7 a.m. hour, and we've got so much to discuss with him.
They're done.
The FAA briefly halting flights to several Florida airports last night. This following a testing failure from Elon Musk's rocket company SpaceX. Affected airports included Miami International and facilities serving Fort Lauderdale, West Palm Beach, and Orlando. Now, a live stream of the 8th test of the test flight for SpaceX's Starship showing several rocket engines appearing to cut out. The company then lost communication with the spacecraft, and video showed debris raining down. SpaceX was able to successfully launch the rocket's booster engine at its facility at the southern tip of Texas. And it's a very unusual situation because it seems so bizarrely beautiful to watch these things rain down, but when you think about what is raining down, it is not.
Well, and how expensive it is, but these.
Well, that's part of
It's
it.
coming in 4 to
The-
5
I just think
weeks.
when you see all of this stuff coming down, it's not. It looks beautiful in the moment, but
It
the truth
seems
is,
to be.
The FAA had to stop flights.
it's debris. No, that's
Right,
what I'm saying.
but
It's not.
It
Nothing
seems
beautiful
to be
about it.
taken for granted that there will be more as the testing continues. This will happen
More.
probably many times.
Yes.
Yeah, and we're leading to something where hopefully it stops happening completely.
We can only hope.
Exactly. Coming up, top stocks to watch in the pre-market, and stay tuned for our special interview on President Trump's tariffs, the economy, and many things. Bitcoin, Reserve, Treasury Secretary Scott Bessent is here, and he will join us on set momentarily. Squawk Box will be right back.
Futures this morning are pointing to a slightly higher open after a pretty difficult week for the markets. We've been watching what's been happening this morning. Let's get down to Dom Chu. He's got a look at this morning's pre-market movers. Dom, what are you seeing so far?
Happy Friday, Becky, Joe, Andrew. Let's start off with shares of Costco, which are lower on sales, coming up short of estimates. Costco CEO hitting on President Trump's tariffs, saying that grocery margins are now much tighter than in the past, and members are likely to become more selective. So Costco shares down on the heels of that report, down 2%. Meanwhile, you've got Baird analysts upgrading JP Morgan, Chase, and Bank of America. Bank of America to an outperform from a prior neutral, and JP Morgan goes to neutral from underperform. Big bank stocks have been struggling hard after President Trump's announced tariffs, but analysts say recent weakness presents a good buying opportunity to get into industry leaders like JP Morgan and Bank of America. Those shares both up between 0.5% and 1% on the morning so far. Now, for that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get all access to the detail and analysis behind those big stories and calls. And we're going to end on shares of Broadcom, which are actually jumping this morning, big, up about 11%. Beats on both revenues and profits, and stronger than expected semiconductor revenues. CEO Hock Tan saying the firm's biggest customers continue to invest aggressively in next generation AI models. So Broadcom, a big bite spot, but we can see here the near-term trend, Becky, has been weakness over the course of the last couple of months. We'll see if that continues. I'll set things back over to you guys.
Okay, Dom, thank you very much. When we come back, our can't-miss interview with Treasury Secretary Scott Bessent. That is right after a break. Stay tuned. Squawk Box. We'll be right back.
It is 7 a.m. on the East Coast, and you're watching Squawk Box on CNBC on this Friday morning. I'm Andrew Sorkin, along with Joe Kernan and Becky Quick. We got a lot going on. The futures right now got some green on the screen after what's been a tumultuous week. S&P 500 up about 16, 17 points now. The Dow Jones looking about 58 points higher. The NASDAQ up about 92 points higher. Take a look at the Treasury yields. We're going to talk about this with the Treasury Secretary, I imagine, in just a moment. The 10-year sitting at just about 4.2, and we're looking now at the 2-year at about 3.95.
We'll get to those probably. There's some other things that start with a T we might talk about first. Now to our headline guest of the morning, Treasury Secretary Scott Bessent. It's great to have you here. Great to have you on the set. So I think in general, people would call this what we're doing kind of a radical departure. I think from decades of what we've seen as far as our global trade policy. We're, as the leader of the free market world, we have always been eschewed these tariffs, etc. I think. Can you just make the case that when we come out on the other side of this, we're going to say, wow, it was really, really worth it? I think you started to do that yesterday. You started to talk about what that looks like. Can you fill in some of the blanks on how you see this playing out?
Sure, Joe. And I don't think it's a radical change. It's just a much needed course adjustment. And when we go back and look at what's happened, there's a new paper out called the China Shock. And it talks about what happened post-2004, that some of the communities recovered, but the workers never recovered. And that it was much more devastating on a human level. And what we are trying to do is make free trade fair trade, because the trading systems have become incredibly imbalanced. You see it with these gigantic trade deficits that we run. You see it with the big surpluses that other countries are accumulating. So we're looking at tariff barriers, non-tariff barriers, currency manipulation, government subsidies, and in the EU, some of these gigantic fines that they're putting on our tech companies just because they see a big pool of capital. And we're going to push back on those. And at the end of the day, President Trump's been saying tariff is his favorite word. I think reciprocal may be his second favorite word. And we're going to put this at the feet of our trading partners on April 2nd. We're going to come out, talk about who's a good actor, who's a bad actor, to what degree they have put up barriers against us, and it'll be a choice. Either they can drop all the market manipulation and things like that they've done that have hurt American workers. And if they do that, then we can have more frictionless trade, or we'll put up the tariff wall, we'll collect a lot of money, and we will make the system fairer.
Couple of things. I think you've made the point that unlike the printing of too much fiat currency, which might be an underlying cause of inflation, the tariffs don't cause long-term inflation. They could cause some price increases, but not long-term. But then at the same time, you said that Americans don't necessarily just want everything to be really cheap. They want our workers to be employed here. And that the prosperity here doesn't mean being able to buy cheap goods. It means being able to live the American dream through having a job and having a future, etc. So we're going to have higher input costs forever.
So what, higher input costs forever? No, it's the tariffs are a one-time price adjustment, and everything else the administration's doing, we're not getting much credit. As of yesterday, energy prices were down 15%. Crude was down 15% since inauguration day. 10-year rates are down, mortgages are down. The spreads between the 10-year rate and mortgages have come in. So we saw we saw mortgage applications pop up last week. I think if we can keep on that trajectory, and Joe, the American dream is to be able to buy a house. We can't import houses.
This could all be a reflection of the economy.
Well, that's what I was going to ask. As an investor who used to spend their day investing in all this stuff, do you look at the 10-year? Do you look at all of the signs that you just talked about, WTI and everything else, and say that is the work of the government and a newfound confidence in what's happening to the economy, or that's actually a concern about what's going to happen to the economy?
Well, I think it's both, because we could have the worst of all worlds, because look, I'm not new to this. When I was on your show last time, I've been saying it for 6 or 9 months. I believe that the Biden administration, and it's back to Joe's question on working Americans and what is the American dream, but the Biden administration created this bad equilibrium where the top 10%, people in this room, probably most of the people watching this show, top 10% of Americans are 40 or 50% of consumption. And that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down. And could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked, and we've become addicted to this government spending, and there's going to be a detox period. There's going to be a detox period.
I think that temporary pain that you've acknowledged, that the president has acknowledged, I think the question becomes, is temporary pain the new transitory inflation? How do you know that we get to the other side of this, and how long do you think it actually takes?
Well, look, there's an adjustment. We'll see whether there's pain. What we are trying to do, I talked about it at the Economic Club of New York yesterday, we are trying to transition from public to private. And I talked about we are going to have safe and sound regulation to get our banking system going again. So the banks should be generating loans to private companies. Employment should be from private companies, not from government. And I'm confident if we have the right policies, it'll be a very smooth transition.
Let me ask you this. I was with a whole bunch of CEOs last night, and they were talking about investing in the United States, question about bringing manufacturing back here, what the tariffs would do. And there's sort of a very interesting, almost behavioral science question, which is how long do the tariffs either have to be in place, or do people have to believe that they are there and permanent forever before the companies decide, okay, actually we are going to invest, knowing or thinking that maybe they're actually going to come off later. How do you think about that?
Well, look, I think that most CEOs, and tariff is kind of the word of the moment, but I actually think what is going to determine the corporate behavior is going to be, do we have good tax policy? Can we make the Tax Cuts and Job Act permanent? Are we creating energy security so that they have the access to cheap energy? Are we going to deregulate, which is another big story of what happened the past 4 years?
The rationale for tariffs, it's jumped around a little bit, and I can give you, I wrote a few down. Fentanyl is why we're doing this, I guess, currently with Mexico and Canada, and there's been...
And China.
And China.
They supply the precursor ingredients for fentanyl.
Reciprocal trades, you even have some of the skeptics kind of go, well, that makes some sense. Want to bring in domestic manufacturing, obviously, what you've talked about. Trade deficits, do you view those as inherently bad? I know the president always points to that, but we do consume, and we're always going to consume more than the rest of the world. And if you do indeed want a strong dollar, it seems like it's something we're going to have to live with. A couple of other ones, punishing bad behavior, security concerns with China. That's a whole slew of reasons to put on tariffs. And it just, at this point, I guess critics would say it looks a little haphazard, the way they go on, they come off. We talk to Mexico and Canada, okay, we talk to the automakers, they don't want us to do it, so we're not going to do it. It just seems like it's being levied in a somewhat haphazard way. Is that not fair?
Of course it's not fair, Joe, but that's what you all do. So,
not all.
Look, it's not linear. It's an organic process, but if we were to look back to a similar process over, well, President Trump's talked about it in his first administration, he talked about it in the campaign trail, he's talked about it since November, is the need for Europeans to fund their own defense. And you just had a very long conversation with past guest, And that all of a sudden, voila, this week, after 25 years of baiting and cajoling, President Trump achieved what 5 other presidents couldn't achieve. The Europeans are going to up their defense spending. The German debt brake is coming off. That was not a linear process. That was not always an attractive process. But now the Europeans say that they are going to pay their fair share.
I mean, this could all make sense in terms of the art of the deal. I mean, I could see it working, but I could also see it not lasting months or even years, the tariffs. I could see, because it does seem near term, it could be disruptive to the stock market, it could be disruptive to the bond market, it could be disruptive to the economy and to jobs and everything else. But if there's a method to it where, you know, maybe they don't go on April 2nd, if the president gets what he wants, are we necessarily going to be in a tariff world for the next 4 years?
Well, look, I think some level of tariffs are going to be necessary, just given
Long term.
Well, we'll see long term, but just given the level of imbalances, and
Right.
the other thing too is, like, if we take China, China is the most unbalanced economy in modern times. They have a very different economic system than we have, and we have let them export their economic system to us, which has resulted in lower wages, loss of the manufacturing base. One very good example would be, as you could see, President Trump is scouring the earth to make sure that we have our strategic and critical minerals.
Right.
That's great. But 85% of the refining of those and processing happens in China. Every time a Western company sets up a processing firm, Chinese competitors drop their prices and put them out of business. So,
How connected in your mind are the tariffs to the later conversation you're going to be having this year around taxes? Meaning that you need the tariffs to deal with certain budgetary issues. And then, of course, the question is going to be what the tax piece looks like. And then, of course, the next question is going to be whether the tariffs then stay on to capture whatever savings you're trying to get so that you can make the budget work.
right. So Andrew, I was in the investment business for 35 years. I thought I understood how crazy CBO scoring is. And now that I'm on the other side of the wall, I can tell you it's really crazy. And very unlikely that we are going to get any credit in the CBO scoring for tariffs. But if you look back, the China tariffs, which the Biden administration has kept on, has brought in hundreds of billions of dollars. And so we will be able to, and those are going to continue, likely go up. And then we'll see what the other levels are. But in terms of the actual budget negotiation, tariffs won't be part of the pay-fors. It will be something that's in the background.
I think people wonder, you've laid out a whole lot of reasons why there's unfair trade around the globe, but I think people wonder with why start with Canada and maybe even Mexico first. Just the idea that they tend to be better trading partners. We had a former U.S. ambassador, Bruce Heyman, to the U.S. ambassador to Canada here earlier this week. He said, you guys went after those 3 because that's where the money is, because he thinks it is going to be used. It's money you need. You need to be able to show and start bringing that money in, and that's why them first.
Yeah, no, the reason it's first is because of fentanyl crisis. I'd have to vigorously disagree with Ambassador Hammond that it's the fentanyl crisis on the southern border, on the northern border, and all these precursor drugs from China.
So I called it a radical departure. Maybe it's not really a radical departure. I want to talk about the dollar and wonder whether there's the slightest crack in what we've had from every Treasury Secretary. I mean, we always ask them the same thing over the years. I've been here so long, been through so many Treasury Secretaries. I've never heard a Treasury Secretary say that they're not for a strong dollar. But a weak dollar would really be an answer to a lot of what you're talking about here in terms of trade deficits, in terms of, we know what a weaker dollar does for future obligations that we have with 37 trillion in debt. That makes it a little easier. Lower interest rates implies probably a weaker dollar. Would you accommodate a weaker dollar at all? Is there any motivation at all to let that happen? Or do we have the strongest dollar policy that we've ever had?
Well, Joe, there's no change in the strong dollar policy, but I can tell you, when you think, what does a strong dollar mean? There's the Bloomberg Currency Index, and the dollar is very strong on that. Then there are bilateral trading relationships, and is the dollar strong or weak on that? And is it strong because of U.S. fundamentals? And I can tell you, we are committed, this administration, President Trump, are committed to the policies that will lead to a strong dollar. If we bring back more manufacturing, if we have cheap energy, good tax policy, deregulate, we will end up with a strong dollar. But what is unacceptable is, in a bilateral relationship, other countries trying to weaken their currency. And so we are against the currency manipulation on a bilateral basis, but globally, the strong dollar is very important. We will continue as a reserve asset, and I think anyone who has an inclination that this administration thinks differently on that's wrong.
As far as the president paying attention to the stock market or the equities market, or not paying attention, in the past, we've thought that is how President Trump at some point gauges his success as president. Now, he doesn't need to be reelected this time in 4 years. The market's been up 20% in the last 2 years, obviously. So is there any perception with him that he's playing with some house money? He said that at one point in the past. And I guess what I'm getting to is, how long or what type of levels on the S&P do you think you would need to see where that might influence some of his policymaking decisions?
Yeah, look, President Trump takes in a lot of information every day, and the stock market's part of it. That, again, as somebody who was on the other side for a long time, and you say, oh, where's the Trump put kick in?
There is no Trump put?
There's no put. The Trump call on the upside is, if we have good policies, then the markets will go up.
He says he's not watching the stock market very closely. Are you?
I watch everything, but and
okay. What's the best put? I mean, you know how the media covers things, and we're down 6% on the S&P. From what you read on a daily basis, it feels like we're down 60 at times, although the NASDAQ is down in correction territory at this point. I'm just wondering, if we ever went down 20% on the NASDAQ or 15% on the S&P, with people that want Trump to fail, that's going to be splayed across every newspaper in the world. I'm just wondering whether the tolerance for something like that for the administration.
Well, look, as you said, Joe, market was up 20% last year, 20%
so there is
the year
some
before.
house money.
No. I'm going to put it another way.
Okay.
Did the Biden administration succeed? The American people weren't buying it just because the market was up. They voted out. The Democrats.
Question related to the regulatory or deregulatory agenda, which I think is part of what you're arguing on a long-term basis is going to help the economy. There's two things that I'm fascinated by. One is that it sounds like the FTC, at least, and the administration is thinking of trying to extend or at least be very similar. I mean, that's to what the Biden agenda was before. I don't know, and that was sort of some of the commentary about sort of what the next version of regulations look like, which surprised me. The second thing that I was surprised by was actually mergers and acquisitions activity in the month of January, which I would have thought would have been up, but actually was down 30%, as if January was back in 2015, and what that says about the confidence, to the extent that you believe that M&A activity is a barometer of confidence.
Well, Andrew, MAGA doesn't stand for Make M&A Great Again, but I think that, again, with deregulation, with the more thoughtful oversight at the FTC, and I think the two new leaders at the top are very thoughtful, that we will see a pickup in corporate activity. I think what we've seen over the past 60 days or the past 6 weeks since President Trump's been in, that doesn't tell us very much. And again, what will we have seen? I've been meeting with a lot of banking heads, investment bank heads, and I think that things are going to loosen up.
Mr. Secretary, can we just talk a little bit about the Democrats got voted out in spite of the big run-ups in the market, and I think a lot of that was because of inflation and because what average Americans were feeling at the grocery store, at the price at the pump, what they were paying for insurance, what they were paying for housing and rent. We did hear from a lot of CEOs this week who said that the tariffs could lead to price hikes almost immediately, this week and next week. The CEO of Target talking about prices for fruits and vegetables that we rely on so heavily on Mexico this time of year. Best Buy saying that they would see price hikes that would go into electronics. Automakers saying you could see price hikes pretty significantly by next week even. I just wonder how much tolerance you think there is from the American people. You're trying to help the bottom 50% of workers. They feel those inflationary prices, and it hits home a lot harder.
Well, Becky, we'll see how the overall inflation numbers work out. That obviously energy's a big component, so we'll see that go down. Committee to Unleash Prosperity, Steve Moore's group, has some very good data on how regulation affected the average household. So if we're cutting that, so that's why I keep urging people to look across the entire spectrum. If you get a one-time price adjustment, and the other thing too is, are we going to, for the bottom 50% of wage earners, can we see real income gains for working Americans? Because I think that was the problem last time, that the top 10% did great, and the bottom 50% got crushed. So if they start seeing real wage gains because the private sector, as opposed to the government's producing the jobs, then I think that would be a big offset.
The other night, President Trump said that he wanted to balance the budget as well. So we're going to have the big, beautiful bill eventually, maybe. And I guess the 2017 tax cuts, would you like to see those extended permanently at this point? If you add, and where I'm getting to, if you add in a lot of the other tax on tips, no tax on Social Security, add it all in, you're not going to get anywhere near a balanced budget unless there's some cuts. I don't know whether DOJ does it. What about Medicaid? At this point, it is the one, I don't know if you want to call it an entitlement, but it's been growing, outpacing Medicare, outpacing Social Security, and it may not be doing what it was designed to do at this point. It's doing a lot more. At least states have tried to get it to do a lot more. Is any Medicaid cut on the table?
Well, I don't know if it has to be a cut, but certainly
slow down in the increases.
Well, slow down in the increases, or just looking at the system and that empowering states. We had a governor's conference 2 weeks ago at the White House, and a lot of the states would prefer to do it themselves. And I'm sitting in the most prolific state for the Medicaid, and New York, Illinois, Chicago are big spenders. So could more states get more money? Some states have to rein in the overspending? Sure.
What else would get us anywhere near a balanced budget if we have all these tax cuts?
Well, growth. If we change the growth trajectory, again, as I was telling Andrew, that when I was on this side of the wall with CBO, I think it doesn't hit anyone. Like the CBO scoring assumes 1.7, 1.8% growth linearly. So if you hike taxes, growth doesn't move. If you cut taxes, the growth doesn't move. So I think if we make the current tax regime permanent, then we will grow. If we deregulate, as we're planning to do, and if we reindustrialize.
Is that a precursor for saying we're not going to look at the numbers, or you're not going to look at the numbers from what the CBO says in terms of what the budget's going to look like? It may not look balanced according to their numbers, but it may be something that you guys say, forget it, we're not paying attention to.
Well, if someone were always wrong, would you look at the numbers? I think they were $1.5 trillion off in the last scoring.
Yeah.
When you had your meeting with President Zelensky, and we've talked about this, I don't know whether you're Treasury Secretary, State, I don't know, I think you're a little bit of all those things, and you've got broad...
Joe, it's 100% Treasury Secretary.
I know, but you were over there, and I just want to get a feeling, because was that last Friday? Was that when that...
The meeting was last
A week
Friday.
ago.
Yeah.
There have been disruptions in maybe the way we approach global trade, and also maybe in what our allies think of this in terms of security across Europe, the Russia-Ukraine situation. I wanted to get your comments. Did you think he was going to sign? Were you under the impression that when you were there that the deal was done and he was going to sign? Zelensky. And did you? Were you treated badly? Can you give us an idea of behind the scenes what happened in that meeting or
in Kyiv?
Yes.
Yeah. So I thought it was very important for me to go to Kyiv and speak with President Zelensky in person in his office. We had a vigorous discussion for 45 minutes or an hour. He did not want to sign the economic partnership agreement there. I explained to him that the purpose of the agreement was to bring the Ukrainian people closer to the U.S. people. That we wanted, part of President Trump's peace plan was to show no daylight between Ukraine and the U.S. So he chose not to sign the deal that day. I asked him, I said, we're going to go out there. There are 50 reporters. What do you want to say? And he said, I am going to tell them that I will sign in Munich. He was meeting with Vice President Vance and Secretary Rubio. He didn't sign the deal in Munich. So then the Ukrainians requested to come to the White House and wanted to sign the deal.
And what do you think was going on, though, in his mind? I mean, you think he was pushing this out because he thought he could get a better deal? He thought that was punitive? What was he?
I think he has this recursive loop of these two words, security guarantee. And the security guarantee is twofold. One, that as the U.S. has more of an economic stake in Ukraine, in the success of the future of Ukraine, because I tell you, like this deal, there is nothing for the U.S. if the Ukrainian economy doesn't succeed. Mm-hmm. So there's an implicit economic security guarantee. And prior to his visit on Friday, President Trump had hosted President Macron of France, Prime Minister Starmer of the UK. These were fantastic meetings. The European leadership, to the extent they are the European leadership, was on board with a plan for the Europeans to provide troops on the ground, the security guarantee, without Americans. The American troops and the NATO backstop starts at the Polish border. And President Zelensky kept pushing for this security guarantee. But I tell you, this was one of the most epic on goals in diplomatic history. All he had to do, come in the White House, have a press conference. We were having a private lunch. If he wanted to try to renegotiate, that would have been the place to do it, not on worldwide TV, and then we were going to go sign the deal.
He says he'll sign it now. Where do things stand?
Well, he said he signed it 2 other times.
Where do things stand? What's going on behind the
scenes? Well, we're going to have to see. The sequencing was supposed to be economic deal, and then again move the Ukrainians closer to the American people, get the confidence of the American people that their money is being spent wisely, and then go and negotiate in a stronger position with Vladimir Putin. So now I think after President Zelensky's performance last Friday, we're going to have to see that he is in favor of a peace deal.
Can I ask you a question just about Russia? And we were talking to Michelle Cabrera earlier. Do you imagine over the next couple of years that American businesses will return to Russia as part of whatever ultimately happens here?
Andrew, again, the situation is very fluid, and everyone is going to jumping to the next thing, that there is definitely a peace deal. President Trump wants a peace deal. He is working hard, and he acknowledges that you have to speak to both sides. And look, he's behind the scenes, he is negotiating just as hard with President Putin, but you can't negotiate with him if you don't speak to him.
Given what happened with you in Kyiv, and then with what you said was going to happen in Munich, I would think that maybe the president and the vice president, that didn't occur in a vacuum, what finally happened last Friday. I mean, they knew full well what had transpired at that point. Does that explain maybe how things went sideways so quickly?
No, look.
Were you treated well in Kyiv? I heard it was a dark room, that he was I don't know, there was some arrogance that.
Look, I think President Zelensky understandably is under a lot of
No
pressure.
doubt.
A lot of pressure, because I can tell you in his office, the whole building's dark. And there's sandbags in the building because they're afraid of a drone getting in the building. Yeah. So I mean, you think of a lot of security in Times Square, and but he, I think, has to acknowledge that the security guarantee is coming from the Europeans.
Have you spoken to him since?
Sorry?
Have you spoken to him since, President Zelensky?
When he came to the Oval, sure.
No, I mean, have you spoken to him since last Friday?
I don't speak with President Zelensky, and I have not been in touch with my counterpart, the finance minister.
100% Treasury, I think, although you just gave a pretty good summary.
All Treasury all the time.
Of what went on. Well, isn't being in business with Ukraine in the mineral business, is there an implied security there? Does Russia not understand that there's an implied security arrangement there with the United States?
Well, Joe, so it's not only a mineral deal, it's an energy deal, and it's an infrastructure deal. And my view of what do the Russians think about this is, so to get to Kyiv, you fly to Poland, take a 10-hour night train in, that 4 hours before I arrived, for the first time since November, the Russians bombed Kyiv. So I believe one person died, 4 were injured, including 2 children. And so I believe that that's what the Russians think of this deal. They don't like it.
Yeah.
Let me ask you just a different question. Maybe this is a political question or a philosophical question. There are some critics of what we're doing as it relates to minerals with Ukraine who say, you know what, the work that the U.S. has done with Ukraine was done on behalf of democracy, was done as a gift, that it wasn't a quid pro quo for some kind of economic situation, and it wasn't something that, you know, I don't know if you believe that the terms of whatever the deal are too tough on Ukraine. But what do you say to those people who say, you know what, we've gotten a benefit by supporting Ukraine thus far, even without genuine economics this way?
Well, I would tell them to look at the deal, which most people haven't seen, can't see yet. And let me tell you what the deal is not. It's not one of these rapacious Chinese deals where we come in, we don't have any mineral rights, we don't have any. This is an economic development deal. So this is, to the extent I've said a lot, I said in my speech at the Economic Club of New York yesterday, economic security is national security. We want to help Ukrainians succeed economically. Poland, which sits next door to Ukraine, Poland and Ukraine, when the Iron Curtain came down, had the same size economies. Poland is 3.5 or 4 times bigger now. And I'll tell you who doesn't like this deal is the Ukrainian oligarchs who tend to have their hand in the till. So we want to make sure that the money goes to the Ukrainian people.
You've got to be able to talk about everything, Scott. Okay, Bitcoin. The reserve. Supposedly there was disappointment that we're not going to be buying Bitcoin outright using taxpayer dollars. But if we can do it in a revenue neutral way, we would. Number one, were you a proponent for the reserve? And 2, is there a way to buy Bitcoin, not just acquire it through, I don't know, however we've gotten these $17 billion worth at this point?
Yeah, so Joe, I'm a big proponent of the U.S. taking the worldwide lead in crypto. I think we have to bring it onshore and they use our best practices and regulation. I think that the Bitcoin reserve, before you can accumulate it, you have to stop selling it. So what we have now is from a seized asset pool, and I wasn't there when it happened, but I believe what happened was about 500 million of Bitcoin was seized, half of it was sold, and what we have now that, say it's over 10 billion, 10, 12 billion, that's all through appreciation. So the first thing to do is to stop the selling. So we're going to, after the victims are paid and all of that, we will any seized assets will go into this reserve, and then we'll see what the way forward is for more acquisitions for the reserves. And we're starting with Bitcoin, but it's an overall crypto reserve.
So how do you think about buying though, and how should taxpayers think about that? Because effectively we'll be levering ourselves to some degree, given that we don't have a surplus of money right now to make these investments.
Yeah, so that's why the first step is to stop selling, and then we're going to put a plan in place from there. So we're having this crypto summit. I'm going back to Washington this afternoon, and then we'll talk about the way forward.
Can I just ask you about the IRS? It's the largest bureau of the Treasury Department, and DOGE has come up with a plan to cut about half of the 90,000 workers there, about 45,000. The president was very clear this week that it's the secretaries who run the departments, not DOGE. I just wonder if you agree with a cut of that size, particularly when there have been points raised and studies done that suggest that for every dollar that the IRS spends on enforcement and trying to go after bringing in revenue brings in about $5 to $12.
Yeah, I'm not sure where this cutting half the employees came from.
Yeah.
What we did was there were 15,000 new employees. We did an evaluation. We kept about half. The ones that, Becky, to your point, were deemed essential to collections. Somehow the other 7,000, United States of America collected taxes for 250 years without them. And look, this is playoff season for us. That game day is April 15th, and I have 3 priorities with the IRS. The collections, privacy, and customer service in that order. So there's nothing I'm going to do to hurt the collections. Over time, we are in the midst of this great AI boom, and I think increasing headcount now would be just the wrong time, as the private corporations are moving into AI, and I can't think of a better application for AI than auditing tax returns.
How are tax returns this year so far?
We don't have the data about. The other thing too is when you ask about physical employees, 90% of the filing's now done online.
Yeah.
I guess we started with tariffs. Maybe we should maybe end with tariffs. And there's a piece in the Journal today about the president's ability constitutionally to levy tariffs, and that he has invoked some emergency powers in the fentanyl case to do it. But the Journal is basically questioning whether, if you don't use fentanyl as a reason, that whether a U.S. president can unilaterally levy tariffs. Do you have a view on that?
Well, Joe, if you want, I could geek out for you. So I
would love, yeah, we love geeks.
It's my natural habitat. So what you're seeing now, the tariffs based on the fentanyl at the border is something called IEPA. That's an emergency statute, but there are 301s or 232s. There's a whole range of actions. Jameson Greer just came in, was confirmed last week as USTR. He has a lot of experience and deep knowledge of the legalities. I am sure that he will be by the book. I think that there were 4,000 legal challenges to President Trump's tariffs last time that withstood the test of time. So, yes, it's not, the administration doesn't have the ability to say, let there be tariffs, but everything we do is based on a specific rule of law that we will invoke.
Every time you finish something, I'm thinking about something else that I want to ask you. I don't know where Alex is, but can I ask? Can we go a little bit longer?
Fine.
Really? All right. Well, the show's over at 9. I don't know whether
Well, I got to get to the crypto side.
Yeah.
China. Would you ever say that we're ready for a trade war? We're ready for any kind of war? I thought that was a little bit strange to hear that coming from China. And I guess where I'm going is, in a perfect world, if we could be rivals in terms of business with China, but loyal trading partners, or at least trading partners, it would benefit both countries. does the president want to get there eventually with China?
Well, look, I think he wants to get to fair trading, and we're a long way off. And again, I will point to look how he has gotten the Europeans to finally pay their fair share on the global defense budget for the Western alliance. So China needs to rebalance. So they have been exporting their economic practices to us. Can we use tariffs to push back against that and force or encourage a rebalancing, which almost every economist believes needs to happen? And so the China relationship is very complicated because in the past, our economic partners, our biggest economic partners, were also our allies. We are now military rivals with China and economic rivals. So it's very tough to disaggregate that. So are they using their big surpluses to build up for this big military buildup? The answer is yes. Could they tone down their military ambitions? Maybe, but again, I like to stay in my economics lane, and there's a lot to do there in terms of to get to fair trade. And again, that I would say that anyone who is commenting on this doesn't understand that the surplus country is the one who will see the most problems in a trade war. The deficit country will do better.
I don't know, you seem very comfortable talking about security. You and Rubio, I think there should be like a hotline.
What should multinational companies who do business in China think? So I know Apple, of course, has a lot of business in China. They've now made a big pledge to do a lot of business in the U.S. But does that change the dynamic in terms of will they ultimately get a carve out on tariffs? There's lots of other businesses that invariably do business in China as well.
Well, I know that Apple is diversifying their supply chain. They made a big push into India. We've seen Vietnam pick up as a trading partner. So we're already seeing corporates take action. I'm on the record as saying I think the only good thing to have come out of COVID was it was a test run for what could happen if we really got into a deep economic war, or the unthinkable happened and we got into a kinetic war. So everyone has realized that optimal supply chains are not reliable supply chains.
Do you think that President Xi will make a move on Taiwan? I asked, by the way, there were some very interesting comments by Elon Musk earlier this week where he even seemed to suggest that there was a relationship that maybe this would actually happen sooner than later.
I follow President Trump's lead, and he is confident that President Xi will not make that move during his presidency.
We wanted one more news flash. I think we wanted. That's what we live for. Thank you for all the time that you gave us today, Mr. Treasury Secretary.
Thanks. It's good to see you.
Great to see you. Come on back, please.
Good. Look forward to your book.
Thank you very, very much. Coming up, a lot more right here on Squawk Box, the countdown to the number of the morning. Okay, we didn't get to talk about jobs, but we will, because the February jobs report is out at 8:30 Eastern Time. Stay tuned. You're watching Squawk Box, and this is CNBC.
tonight.
There's no put. The Trump call on the upside is if we have good policies, then the markets will go up.
That was Treasury Secretary Scott Bessent just moments ago when he was asked about the state of the markets. Joining us right now is Sarah Malik, who is Chief Investment Officer and Head of Equities and Fixed Income at Nuveen. Sarah, I take it that you were listening to what the Treasury Secretary had to say. What do you think coming out of that interview?
Well, markets are skeptical that the use of tariffs to rebalance global trade won't lead to either a growth scare or a reacceleration of inflation. And that's why you've seen the S&P 500 gains since the election get completely wiped out, and also international markets are outperforming the U.S. markets year to date. I think the catalyst that we need to see for the S&P to find solid footing is either clearer signs that economic data is strengthening, and that will either come from the consumer or employment markets. Now, from the consumer, we've seen retail sales miss. We've seen companies talking about how the consumer is pulling back. And then looking at employment markets after January's number, which was fairly weak versus the prior months, and also the fact that half of payroll creation since 2019 has been government driven, I'm concerned today's payroll number will be closer to 100,000 rather than 200,000, and that we're going to see continued signs that the employment market is weakening. So I think this trend of the U.S. remaining defensive and European and Asian markets outperforming the U.S. is likely to continue for the time being until we get that economic clarity.
So you don't sound like you're a buyer right now of U.S. equities.
I think it's tough for U.S. equities because of the economic data that we're seeing and the fears over inflation. Now, I get the argument that deregulation and tax cuts could lead to offsetting any issues we see because of tariffs, but those are further out right now. We don't have clarity on those. And then, of course, there is this question about the Fed. Usually when tariffs come into place, you do see a one-time bump in inflation. Will the Fed look at that as transitory, or will the Fed react to that is unclear. So all of that uncertainty in the U.S. and the fact that we came into this year with the S&P 500 at about a 20% premium to history makes it tough. And let's not forget one more thing, which is the technology sector. 30% of the S&P 500 weighting, tech stocks have suffered, and that also is leading to the U.S. suffering versus the rest of the world.
Yeah, I guess in terms of inflation, in terms of the pain that the president has acknowledged, there could be some short-term pain in some of these issues. I think the question becomes how long and how deep in terms of that pain. Have you tried to put any of that into your figuring here?
Well, I think that's, what's unclear right now. If you look at market technicals, they're quite weak. Earnings growth for the first quarter was up about 12% year over year. So we have seen strong earnings, but the outlooks are pretty murky at this point. And then I did mention technology stocks. I think that's another real issue for the economy and the markets. We did see Broadcom report a positive number, which is good, but I think that's very Broadcom specific because of their custom chips and also their non-AI business. But if you look at tech overall, Marvell, NVIDIA, we're seeing weakness there. And I think it's going to be challenging for the U.S. to outperform when 30% of the S&P's benchmark is around a sector that's struggling. I think there's earnings downside. There's unfortunately some valuation compression issues for the U.S. that could be ahead of us. So until we see either that consumer start to reaccelerate and come back more strongly, or employment markets not show signs of initial cracking, it's going to be tough to find the bottom for the U.S. markets.
6 weeks ago, all you heard from executives, corporate executives, was this idea of animal spirits. Today, when you talk to them, most of them will cite uncertainty as the biggest factor that they're kind of focused on right now. And you might be able to pin that back to the tariffs, the on-again, off-again nature of these things, the uncertainty with what's going to happen. Would you change your mind if there was more certainty on the tariffs, if we knew exactly what the playbook looked like, or if we said, never mind, we're not going to impose some of those?
I think definitely markets would appreciate more certainty here around tariffs, and also maybe some clarity from the Fed in terms of how they may react to tariffs. But of course, the Fed may not know that yet until we see start some of the impact from the tariffs that are coming into place. If you go back to the election, the optimism around the election was around the tax cuts and how that would help the consumer, and deregulation, theoretically opening up the M&A market. Unfortunately for the markets, we haven't seen that yet, but what we have seen is this back and forth and this roller coaster ride with tariffs. The back and forth on tariffs is creating uncertainty, and of course the impact of those. Does the consumer bear the cost? Does the producer bear the cost? How does the Fed react? All of that is becoming very unclear for the market to price in, and that's why you're seeing so much volatility. The S&P generally moving at least 1% a day over the past 6 or 7 days. All of that is the market's telling you they don't really know which way to go given this lack of clarity. So clarity would definitely help here, and I don't think we're getting that at this point.
Sarah, thank you.
Thanks for having me.
All right, coming up, closer look at the market ahead of today's jobs report. The futures right now are mixed. This morning, S&P still higher, NASDAQ up a little. SmartBox is coming right back. It could change in about 40 minutes.
Welcome back to Squawk Box. Shares of HP Enterprises plunging. Our earnings matching estimates, revenue slightly higher than expected, but take a look at what's going on here because the guidance for the current quarter and full year coming in below estimates. The stock now off about 20% just on the back of this news, folks. Now, the company's saying it had higher than normal inventory for AI servers because of a shift to next generation NVIDIA Blackwell processors. As a result, the backlog for its AI systems was up 29% from the prior quarter. Now, HP Enterprise has already limited travel and discretionary spending for workers and announced a cost-cutting program involving layoffs of about 2,500 employees over the next 18 months. It's about 5% of its workforce. And just one mention, I think about this a lot because we're talking about these NVIDIA processors and the like, and this goes to the idea of some of these build-outs that are going on. A lot of these chips actually need to be upgraded constantly. Yeah. So when people are talking about building out, new data centers and the like, there's a question of just how long. I mean, you can keep, I guess, backfilling the data center, but this is there's sort of an ongoing, constant upgrade cycle that needs to be going on.
It's expensive too, by the way.
It's expensive. It's expensive, and the company's CEO is going to join the team on Money Movers a little later today. That's going to happen at 11 a.m. A conversation, frankly, you really don't want to miss. 20% off right now.
Coming up, automakers, one of the sectors making some big moves this week. We'll take a closer look next. Plus, Don't miss our interview with Robinhood CEO Vlad Tenev coming up in just a few minutes. Stay tuned. Squawk Box will be right back.
Welcome back, Squawk Box. Automakers having a whipsaw of a week. Tesla down more than 10% since Monday. Philip O joins us with the latest on what is going on. I know we're talking about Tesla, but frankly, the tariffs and the impact on a lot of the American companies that have the bigger issues in Mexico and the like. What's going on?
Absolutely. It's been a brutal week. We'll talk about Tesla in a little bit. Let me run through what these stocks have done, not only over the last week, but over the last month. Starting first off with the automakers, and we're looking here at GM, Ford, Stellantis. You know the story that the 25% tariff, it's on hold for USMCA compliant vehicles. Basically, no tariffs for these guys, at least through April 2nd. In terms of the auto dealers, look, 23% of their sales come from vehicles that were built in Mexico or Canada. So far, I should point out, we've checked with the industry. We have not seen an adjustment either in terms of pricing or incentives, though that is expected to change. In terms of the auto suppliers, yesterday afternoon, they started to come back a little bit. First time we've seen a little bit of life for these stocks over the last week and a half. Remember, many of them have said they're going to have to pass along the tariff costs. And finally, there is Tesla. We've got two upgrades today, or two notes about Tesla. First of all, TD Cowen has upgraded shares of Tesla to a buy. Wedbush, Dan Ives, he's on constantly. You know that he's a perma-bull when it comes to Tesla right now. He has added Tesla to its fresh ideas list. The bottom line with Tesla is this, guys. There is a separation. There are the retail investors who have said, I believe in AI, I believe in autonomous vehicle technology, I believe in robotics, that's the future, and I believe in Elon Musk. There are the headlines that Tesla sales are slowing down. People are not crazy about the brand right now. And yes, that's weighing on shares of Tesla, but now you're starting to see as these valuations come down, the bulls are going to start coming back out here.
Hey, Phil, can I ask really quickly? We've talked a lot this week about how uncertainty could lead to not just businesses slowing their investing and their purchases, but consumers as well. And I think when you look around, not knowing what prices are going to be, maybe that freezes things. I do wonder, though, if a 1-month reprieve of these tariffs that could lead to higher prices almost instantaneously for car prices. If you've been thinking about buying a car, do you step up your purchase? Does it pull forward purchases this month before things could get a lot more expensive? You pointed out earlier this week it could lead to an increase of about $9,000 for car and truck prices.
Absolutely, and I think there are a number of people, and I think dealers have heard this from some people, is now the time to pull the trigger if I believe that my vehicle is going to cost $5,000, $6,000 more come late April, May, whenever it might be. And yes, there's going to be some of that. But for the most part, there still remains a little bit of a wait-and-see attitude, even with consumers, in terms of, are we really going to see a 25% increase in vehicles that are built in Mexico and Canada? Because that's, I mean, you will see a definitive price increase and you will see incentives drop. That, I mean, I don't think there's anybody in the industry who does not believe that's going to happen.
Okay. Phil, we're going to leave it there. Appreciate it very, very much.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, Treasury Secretary Scott Bessent joining us earlier this morning on the set to talk about the president's plan to lower inflation.
The Biden administration created this bad equilibrium where the top 10%, people in this room, probably most of the people watching this show, top 10% of Americans are 40 or 50% of consumption. And that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down. And could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked, and we've become addicted to this government spending, and there's going to be a detox period.
It's Jobs Friday. Economists expecting non-farm payrolls to have increased by 170,000 jobs last month. We've got the numbers and the market reaction less than 30 minutes away. And a reported deal that we've been telling you about for several weeks is now official. Sycamore Partners is taking Walgreens private for about $10 billion. Sycamore will pay $11.45 a share. That represents a roughly 8% premium to yesterday's closing price. And you can see Walgreens Boots up by 6.25%. It's been higher on anticipation of that deal before it even happened.
Let's get to Mike Santoli at the NYSE. Hey, Mike.
Hey, Joe. Yeah, kind of an apprehensive market take going into the jobs number. The market for the last 3 days has been trying to make this 200-day moving average area around 5,700 on the S&P count. You've got a bottom 3 days in a row around that area. It's not magic, but it does sometimes act as a little bit of a coming together of where longer-term demand might kind of meet the short-term selling. About, I say, 60% historically of 5+% pullbacks don't get to a 10% correction. So that people are thinking that if we get some reassurance maybe on the jobs front, market does crave a little bit of a sense that the economy underneath everything else that's going on remains okay. Not too dissimilar, by the way, from what we saw in late July, August, about a 6% drop in the S&P over a couple of weeks. Then you got the extra push lower in that yen carry trade unwind. So you have to watch the currency markets and global capital markets for signs of, cross-asset stress. Take a look here at the dollar index as well as the commodity ETF, commodity index, really coming down, and on a one-year basis, just about flat. I know Treasury Secretary Bessent was talking about oil coming down. That's the dollar, that's commodities, and obviously that's represents loosening of financial conditions, assuming it's not just because the economy is weakening. Obviously, this idea of rebalancing around the world, Europe, the euro soaring on that German fiscal move and spending on infrastructure and military spending, kind of a good thing unless it sort of breaks something along the way with these really rapid currency and bond yield movements. Finally, a couple of former bellwether areas of the economy and the stock market, semiconductors and home builders, having it tough. Although you do see this bounce attempt in the builders there recently. It's off the similar level that we got back in the summer. Also, semis have been trying to make this sort of the floor of the range for a while right now. Real kind of wrenching rotations within this market as momentum stocks have really cracked, and other stuff has not quite stepped in to pick up the slack, guys.
Okay. Thanks, Mike.
When we come back in just a little bit, we got reaction to our big interview with the Treasury Secretary this morning, Scott Bessent, from Canada's Minister of Industry. We're going to talk tariffs, trade, and much more. And then after the break, we're going to talk about President Trump's executive order creating a strategic crypto reserve. Robinhood CEO Vlad Tenev is going to join us before heading to the White House Crypto Summit. All that and more as Squawk rolls on.
who get it done.
Welcome back to Squawk Box. President Trump signing an executive order to create a strategic Bitcoin reserve, but cryptocurrencies falling as traders seem disappointed with some of the details. In a post on X, the White House crypto czar, David Sachs, saying the reserve will be funded exclusively with Bitcoin seized in criminal and civil forfeiture cases. He also said no Bitcoin will be sold from the reserve. Treasury Secretary Scott Bessent had this to say about the reserve just a short time ago right here on Squawk Box.
I'm a big proponent of the U.S. taking the worldwide lead in crypto. I think we have to bring it onshore and they use our best practices and regulation. I think that the Bitcoin reserve, before you can accumulate it, you have to stop selling it. We're starting with Bitcoin, but it's an overall crypto reserve.
Today, the White House hosting a digital asset summit. Attendees include Coinbase CEO Brian Armstrong, Strategy CEO Michael Saylor, Gemini co-founders Tyler and Cameron Winklevoss, and our next guest as well. Joining us right here first on CNBC is Robinhood's co-founder and CEO Vlad Tenev. Good morning to you. There was a lot of debate about this beforehand from the crypto community, also the tech community, when it was first floated that there would be a Bitcoin reserve, and then just last week this idea that other coins would be involved and that there was sort of a backlash to some of it. Now there's a different kind of backlash this morning saying maybe they didn't go far enough. What do you think?
Hey, Andrew, good to be here. I actually think this is a sensible approach by the administration. I think that, you know, there's a lot of debate. Obviously, there's some people in the industry that maybe wanted more or different assets, but I think this is an approach that isn't terribly controversial. It's a good place to start, and there's a lot of things that we need to get done. I agree with Secretary Bessent that the U.S. needs to be a leader in this new burgeoning industry. And, you know, there's stablecoin that needs to be figured out, market structure, prediction markets. So I think as an industry, we have to join together, be united, and keep pushing to make the U.S. #1 in this industry.
Vlad, do you believe ultimately that the U.S. government and therefore U.S. taxpayers should be investing in and, let's be honest, levering themselves up to buy additional Bitcoin?
I think that the U.S. Has to make a determination about why it needs various cryptocurrencies and whether it needs them strategically. So I think that having some clarity on what happens in these cases where there's forfeiture or the U.S. Government somehow obtains it, and whether, you know, they're selling it or holding it, that clarity is actually useful to the market, because you've seen in cases like that the uncertainty causes fear. So I think this is a good place to start. Now, how far it goes, I have sort of less of a strong opinion. I know others. There are other experts at the summit on Bitcoin strategic acquisition and other things.
I have two related questions. One is, this is an executive order, and I wish I'd actually had the opportunity to ask the Treasury Secretary this. Do you consider this an emergency?
I'm not sure. I mean, I think that there's various definitions of what constitutes an emergency, but what's clear is the U.S. and this administration is taking crypto leadership seriously and acting with a great sense of urgency. And I think the summit that they're holding today at the White House is a great example of that. I mean, certainly the administration's moving fast, government's moving fast, but I think rapid change is necessary if we're going to maintain U.S. leadership in what's an increasingly uncertain world.
Well, to be honest, we unfortunately switched topics at one point.
And they were
from that,
we could have gone.
I wanted
at the
to go
very
back.
end, you had the last two when they were jumping up and down.
There were a couple other things that I was hoping to.
Hey, Vlad, did you seem? I mean, some people think all companies should have a treasury filled with Bitcoin. Could you ever see that being something that the United States would be, and it would probably be taxpayer money, but if it's going to 1 million, wouldn't that help in a lot of different ways for Treasury to have that reserve?
Well, I think that you get into the general question of should the U.S. be investing its money? once you expand beyond Bitcoin into all sorts of other assets and potentially securities, and many
Governments buy
countries have a
gold.
sovereign
They
wealth.
buy gold.
Many
Stock
countries have a
market.
sovereign wealth fund, which we're
Yeah.
also instituting. So
don't buy
I don't
gold
think
anymore.
that's a
No, not us, but some
unreasonable
lot of
approach.
countries do.
Right. Hey, Vlad, not only are we potentially buying Bitcoin in the future, but these other coins as well. And I'm curious how you think about that. I'm also curious how you think about the fact that so many members of the administration are invested in crypto themselves, and that inherent conflict that I think is very visible to those who want to see it.
Well, from what I've seen, I think that everyone's aware of that concern, and most people that I've talked to have taken steps to actually make sure that they're not conflicted by, selling their exposure or otherwise making sure they're disinterested. I know there's been a lot of conversation about that. I think a lot of people in the administration are joining because they really see an opportunity to help and put their talents in making our country and our government work better. I'm excited to see them. They're moving incredibly fast, but I think it's necessary.
There's a headline that says that the NASDAQ, which of course is the home of where we are right now, joining the exchanges seeking to offer round-the-clock trading. This is something that I think you've been a proponent of. Where do you think that stands right now?
I think that it's the future. I think especially when you talk about other assets like cryptocurrencies trading 24/7 around the clock with native fractionalization, so you can buy any amounts of these assets. It's a little bit silly to think that the U.S. markets are tied to, East Coast working hours. And what we've seen, we've been early in offering a product called 24-hour market to our customers. It's extremely useful for customers to be able to see what's going to happen before Monday market open. So 24-hour market opens on Sunday, and it's turning into a critical piece for risk management. If you're able to manage your positions, hedge risk on Sunday evening ahead of Monday open, then that's something that you would feel like you're at a disadvantage using any other platform. And I think that's true for the markets in general. So I'm excited to see more progress in making that a standard.
Hey, Vlad, before you go, I know you're off to this crypto summit. What are you hoping to learn? Meaning, what are the questions that are on the top of your mind about how this is all going to work?
Yeah, that's a great question. I think there's a couple of things that need to be done to establish U.S. leadership across this burgeoning industry. Beyond just the question of the strategic reserve, there's a stablecoin bill that people are working very hard on, and I think there's consensus that that's going to be the first step. And then once we go beyond stablecoin, the interesting question, the one that I care most about, is tokenization. So how can we list crypto asset securities? What qualifies as a security versus a commodity? How do we deal with crypto prediction markets and other derivatives? I think that's all contemplated to be part of a broader market structure initiative. And if those can get done in the next few months, I think that will be a great success for the industry here in the U.S.
Vlad, I want to thank you for joining us. Good luck at the summit later, and we hope to talk to you again about all of it.
Thanks, guys.
Very soon. Thanks.
All right, up next, the latest twist on tariffs and reaction to Treasury Secretary Scott Bessent's comments earlier in the show. Canada's Minister of Industry will join us right after this break. And the countdown is on to the February employment report. We've got the numbers and the market reaction. That's coming at 8:30 a.m. Eastern Time. Squawk Box will be right back.
Assurance.
The administration doesn't have the ability to say, let there be tariffs, but everything we do is based on a specific rule of law that we will invoke.
Was Treasury Secretary Scott Bessent right here on Squawk Box earlier in the program. Joining us right now is Canadian Industry Minister Francois-Philippe Champagne. He is the country's equivalent of the Commerce Secretary here in the United States. And Minister, thank you for being with us this morning. Trying to follow what's been happening with tariffs has been a little difficult, even for those of us who do this for a living. Why don't you bring us up to speed on the latest in terms of where things stand right now between Canada and the United States on these tariffs?
Well, first of all, thank you for having me. It's a real pleasure. I would agree with you. I think there's like policy fatigue, that you're seeing now. The markets have spoken, workers have spoken, industry has spoken. I've been talking to U.S. CEOs, and you know what? We cannot allow uncertainty to become the new certainty. We have to work hand in hand. We need to work between Canada and the United States to remain very competitive. Because that's the best way to achieve the plan that was set up. I was at the inauguration. I was at the Emancipation Hall during the inauguration. I remember when the president talked about the golden age of America. I was saying, well, if it's good for America, it's going to be good for Canada. Because, by the way, I'm always reminding Becky when I go to Washington that Canada is the biggest customer to the United States. We buy more from the U.S. than China, Japan, the UK, and France combined. And where I come from, when you're the biggest customer, you're treated well because that's how we are. We've been integrated in our economy. So what we want is obviously for these tariffs to go away and to make sure that we can work together with the administration. We're ready to do our share. We've done it on the border on fentanyl. We want no fentanyl on our streets. We want to control immigration. And you know what? That's why you've seen so much going on in the market. That uncertainty is not helping industries, not helping our workers, and certainly is not helping to make North America more competitive.
Do you have a clear idea of what it is you need to do to keep these tariffs from being implemented next month?
Well, it seems that's a very good question. It seems that the goalposts keep moving, and that's what makes it difficult. I was Secretary of State for Canada during the first Trump administration, so I've been there. I've been working with the administration, but what we had at the time, we had a process. We had negotiators. We had issues that we could discuss. We're the best friends. We're the best allies. We're the best partners. We depend on each other when it comes to energy, critical minerals, semiconductors. So I just think that we need to get back to a place of normalcy in our relationship between Canada and the United States. Because you know what? Today, economic security is national security. When you talk about aluminum, and I heard in the State of the Union address, the president talk about shipbuilding. That's very important to make sure that we can face our adversaries. And I always say Canada is not the problem. Canada is part of the solution. We need to work together to protect our economy. And the challenge is coming from China. So when I hear Secretary Bessent, I would agree with him. I have been preventing a number of Chinese investments to protect our national security, to protect our critical supply chain. And I think we should be seen like that. We deserve credit for what we've been doing to protect that. It's good for Canada, but it's also good for our American partners.
You said that you've done the work you think that needs to be done when it comes to fentanyl, when it comes to immigration, protecting the borders. Does this feel to you like there's going to be a renegotiation of the USMCA that was signed and put into law under the first Trump administration?
Yeah, that's a good point. I mean, President Trump signed the USMCA, and therefore, if he wants to, there's a process for a review. And we've said we're willing to engage with the administration on that. What we need is stability and predictability on both sides of the border. When you're talking, for example, in the auto sector, those are very long supply chain. You cannot change the rules from day to day or week to week. We need to have that predictability so that we are more competitive together, we are more innovative together, and we can sell more of our goods across the ocean to the world. That's really what it is for us. So I am very keen to engage with the administration. We've been doing that. For 10 years, I've been engaging with the administration on in different roles. And I can tell you the world is watching us as well. The world is watching how we're going to be able to solve those differences and to work together. And I think we can bring great things, whether it's on the energy side, nuclear energy, that we can work together, critical minerals. You know, we have a lot to offer to the world, and the best way to do it is to do it together.
The president, though, President Trump, has been pretty clear that he would like to reset things, that he wants to see fair trade. He would like to see some of those plants that are in places like Canada and Mexico moved back to the United States. Is that a starting point for a negotiation with you all?
Well, I would say there's a good reasons why these plants are on both sides of the border, because that's what makes us more competitive. Canada is the largest supplier of aluminum to the United States, and there's good reason, because not only we have the workers, but we have the energy to make sure that we have the most competitive price. Same thing when it comes to steel. If you look at the steel producers, and Becky, I've been in touch with a number of CEOs, they have assets on both sides of the border. The point is that we have an integrated economy, and if you exclude energy, actually the United States has a surplus with Canada. So that's, you know, you need to get back to the fact and make sure that the political discourse is matching the industrial reality. The reality is that we are joined up together when it comes to energy, when it comes to natural resources, to manufacturing. And it'd be really a shame that we put behind us decades of good work we've been doing together. I meet as many US CEOs as Canadian CEOs, and Becky, they have assets on both sides. They don't understand. And people say, you know, tariff on Canada is a tax on American. It means that, you know, people who want to buy a pickup truck will have to pay more. It means that people will pay more at the grocery store. It means that people will pay more for gas. We don't want that. We want to work together. We want to do more together. And that's what we've been working on with the administration. And I hope we can get back to a place where we can discuss issues together. And you know, I've been said, there cannot be tariff without consequences. There cannot be tariff without impact. And there cannot be tariff with higher prices for American consumers. So let's get back to the table and make sure that we do things together as we have always done to protect North America.
Minister Champagne, thank you for joining us today.
Always a pleasure. Thank you very much.
Up next, the jobs report. Our panel is standing by with predictions and reactions to the numbers. Squawk Box will be back in 30 seconds.
Next, anything.
We are just seconds away, about a half minute from the February employment report. The futures have been mostly flat for most of the morning, waiting the big number. S&P is unchanged, Dow's off a little bit, and the NASDAQ just a little bit higher. Rick Santelli is waiting in the wings, standing by at the CME in Chicago. Do you want to give us your estimate, Rick?
Yeah, I think we're going to be somewhere in the 150 to 180 camp. We're looking for a number kind of 160-ish, so I'm right in line with expectations. After ADP, it seems many were a bit nervous that this number was 151,000. 151,000 is our February read on the creation of non-farm jobs, with a slight revision from last month from 143 to 125. And if you look at the combined 2-month revision, it turns out to be minus 2,000. Now, let's go to the unemployment rate, shall we? Known as U3. 4.1, it moves up from 4.0. It equals where we were in December of last year. To find a higher number, you go to November of 24 when it was 4.2. Now, average hourly earnings come in here on a month-over-month basis at up 0.3 as expected, and that does follow that wild jump that we saw up 0.5%, which was the strongest month-over-month number since January of 22. Now, if you look at 0.3, that equals where we finished 2024. If you take a year-over-year perspective, also a bit less, 4%. 4.0. That's 1/10 less than expected, 1/10 less than the rear view mirror. It equals, actually, 4.0. The last number we had that would be equal or less than would be September of last year when it was 3.9. If we look at our work week, and this is what distorted earnings last month, in my opinion, the work week last week came in at 34.1. Get this, we've been keeping track of the average weekly hours since March of 2006. This number at 34.1 was the lowest, the smallest, since March of 2010. March of 2010, and we remain at that level. Now, let's go to the U6. That's the underemployment rate. That comes in at 8%, a huge jump from 7.5 to 8%. To find a higher number than that, you're back to October of 21 when it was 8.2. And finally, labor force participation rate, moving in the wrong direction, 62.4 down from 62.6. 62.4 equals where we were in January of 23. To find a smaller number, you're going to D's of 22. After all that is over, interest rates have moved up just a smidge. Pre-opening equities are moving up a bit as well. The numbers are not nearly as dire. They're fairly close to expectations. And I think that work week, it caused a little volatility on its adjustment to some of those earnings numbers. And real quickly, the Treasury Secretary this morning hit on what many of my sources and I discussed, and that is the notion of private sector versus public sector when it comes to spending and growth. How many economists have you heard from, Joe and the gang, that say our fiscal path is unsustainable? Well, there's a lot of growth associated with that unsustainable debt-ridden path, and I think as we try to address that, the obvious is going to occur. We're going to lose some of that growth. But think about it. It's unsustainable to pay for it in the way we have been. Back to the panel.
All right, thanks, Rick. Steve Leisman is here. So, Steve, do I look at this as the world is still sort of the same as it was and didn't fall off a cliff, or is it sort of net enough to allow for cuts this year? Why the jump in equity prices immediately?
I think we feel like maybe we dodged a little bit of a bullet. I like the first comment you made. It feels like things are kind of sort of the same as they were.
And
you had a nice upgrade.
People really thought that fear of what's coming could have caused people not to hire? Or?
Yeah, Joe, I'm going to give you a little background on this. One of the best things I ever did for the front page of the Wall Street Journal was write a story about how consumer sentiment is not a good indicator of consumer purchases. Many years ago, in the year 2000, I think that was, which is what, 24 years? In 2000, in the wake of 9/11. And so, look, what's happening in Washington, which, by the way, makes the Treasury Secretary's appearance here all the more important, how kind of calm and stabilizing and cogent he was with all of his answers, if I might editorialize for a minute. There's a lot of concern out there, a lot of turmoil, a lot of chaos. You come in one day and things are tariffs are on, tariffs are off, tariffs are partly on, tariffs are partly off. You don't know what's going on. People are desperate for a little stability out there. And so this number comes in and it shows, you know what? Whatever happened in the period leading up to the date, the cutoff date, which was the 12th, was okay.
But didn't most of the government job cuts come after that?
It's all after that. And what we're going to learn is the importance of this stability in Washington when it comes to policy to private sector hiring. We're going to learn, and we're learning, I was talking to our next guest on this, Joe Lavorgna, about this, how much government spending matters inside not just the government sector, but the private sector as well. There was a minus 10K on federal employment, okay? A lot of the private sector jobs were in education and health services, about half of the private sector jobs. There's some changes in spending there. So it's a good stop or takeoff point when it comes to where we're going, but there's still a lot of uncertainty in the future.
Yeah. Everything's reversed itself. Hey, Joe, how are you? Let's get to the rest of our panel. Joe Lavorgna is here, chief economist at SMBC Nico Securities, America, Jason Furman, Harvard Kennedy School professor, our own Mike Santoli, is at the New York Stock Exchange. I'll start with you, Joe. So what do you mean? I think
Yeah, the numbers are okay. I mean, they're not bad. But, Steve was talking about, the chaos, which is an overused term. And I would say what the administration's doing on tariffs makes a whole lot of sense, because the chaos, with the quotes, is not it's not a bug, it's a feature. And it's making the market more immune and numb to what will happen in a way that the markets can adjust. So ultimately, when the debate with China takes on more ferocity and intensity, we'll have prepped the markets for everything.
So you hit your head against the wall because it feels so good when
No,
you stop?
no, I didn't say that. No,
It's kind of
the
what you
markets,
said.
no, because the markets need to adjust
Did you hear
in
it?
a way that they can not totally fall apart. And you have to sort of put it out and then take it back, put it out and take it back. That's how I see it. There was a lot of criticism with Malay and Argentina, and look, a year later, look how wonderful the improvements have been there. Notice he was one of the first people to come visit the president on inauguration.
Chaos, Jason. I guess I called it a little bit, Steve. I referred to it to the Treasury Secretary as somewhat haphazard. Some of the critics would say about putting tariffs, taking them off, seat of the pants, Jason. But we just heard from Joe that prepares you for the next round of chaos, and you won't be nearly as worried.
I think that's a little nuts. The idea is we're going to lower the market by 10% now, so that when we do something later, it doesn't lower the market. I just don't get it at all. Don't think we should be trying to rationalize putting big tariffs on, taking them off, big ones on, partially taking them off, threatening them on multiple dates. I don't think there's a strategy here. I don't think there's a good rationale here. And what's been really surprising to me is how blasé the administration has been about the central issue that got them elected in the first place, which was the cost that Americans are paying. They're being remarkably blasé.
Jason, we went up to 9%, and the cumulative inflation was 25%. What are you talking about? A couple of tenths of percent of disappointment on the recent CPI and PPI. What eggs?
Joe, I was a critic of that legislation.
I know, but we don't know inflation has come back. We don't know inflation is roaring right now.
But a couple tenths says you're indifferent to inflation. The inflation rate right now is running at about 2.5% underlying inflation. Add 5/10 to that, you're at 3. What's the difference between 2.5
Why are you jumping? Have we added 5/10 yet? We haven't added 5/10 yet. It hasn't happened yet. Wait for it to happen.
The way you get creeping inflation is you start saying, 1/10 here, 1/10 there. Who cares?
God,
So you're at 3%
you
inflation.
guys are jonesing for some inflation, so you can say it wasn't by fault.
Do I think it's good on inflation?
Wait till it happens
But every
before you
10
say
matters, Joe. Every 10
wait till it
matters.
happens.
If tariffs are not inflationary, I don't understand why everybody thinks that's the case. If the money stock is unchanged, then tariffs by definition cannot be inflationary. Inflation is always and everywhere a monetary phenomenon, and I caveat it by we add the word credit, because we've got private credit
That is only
markets.
true if other prices are falling. If you engineer
Well,
an
but
exception, then some
Jason,
prices
that's
go
the
up,
whole-
other prices go
that-
down.
that is
Prices
the point,
tend to
though.
be sticky, so to get those
This
other
is-
prices down,
that is the whole
take
point, though.
weakness in activity.
First of all, if
So
you
if
have
the
a
Fed
price
wants to
level,
weaken activity, then it won't cause inflation. I agree with that.
if we have a price level adjustment, other prices, yes, should fall over time. However, if we go back and look at 18, what we saw is the exchange rate offset a lot of it, and when Mexican tariffs were announced, the peso fell 17%. And in the case of China back in 18, they absorbed it in the market.
Hey, Rick.
Yeah, and yada, 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 the manufacturing sector went into recession.
Let me get through
that
that.
happened. I agree
Hey,
with
Rick.
that. That, by the way, will hurt American manufacturing. You're talking about
Hey, Rick, if Democrats, eggs. What about energy? What about oil? What about, all you got is eggs at this point. Jason, wait for it to happen before you, go ahead, Rick.
Oh, I don't want to wait for that, Joe. I want to warn people about policies that will worsen the economy.
Structural issues were created in the last administration on a number of fronts that are going to be very difficult to extract. And many of those structural issues have been causing inflation, whether it was spending fueled by debt creation, whether it was energy policy fueled by insanity, and all that will extract a temporary price. There is nothing for free here. When you complain about all the programs that were enacted after and during COVID that were crazy big, Well, to reverse them, that we paid for our growth, but we paid for it mostly with debt. This is not going to be pretty, it's not going to be easy, but if our panel's discussion is anything, it's a bit depressing, because if we can't take some volatility in a damn stock market to get our fiscal house in order for our kids and our grandkids, what comes next?
It's
Rick, I don't understand how
unnecessary
putting tariffs on
volatility.
and off is getting our fiscal house in order.
It's-
That's what's
it's
promoting volatility here. Tariffs go up, tariffs go down, tariffs go up, tariffs go down.
Well, tariffs
That's not
they've been
helping any.
threatened. They
I
haven't
agree
even been
with you on the
inputted
Biden
yet.
problems. I've written about them extensively.
They haven't even been inputted yet. They got
Doesn't solve
eggs.
They got eggs.
So,
That's all they
Steve,
got.
you already raised a very interesting point about the volatility. Like, markets are supposed to be volatile. This happens. I don't understand and if you want to be disruptive and you want to make real fundamental change, things are going to get broken. And I think the administration certainly is willing to break things.
I'm sorry, Joe, I reject that. Without having any issue at all with the objectives of the administration. I've been covering economic policy from administrations for several decades now. When they have a plan, they call you in, they give you a briefing book, they give you a series of estimates, they've thought it through. This administration, it appears to me, did not talk to the car companies until 3 days after the tariffs were put in place. Joe, you can do this better. I can do this better. The administration can do this better.
Can I say one thing to you, Steve?
In November, October, and September, he said he was going to do this. What do you need to call
That's
the car
different.
Actually, it
That's
didn't say
different. That's different.
it didn't say 25% on Canada and Mexico.
But
Wait, I
Didn't say
can't
that
hear.
before the election.
Does anybody know even what happened here? I mean, we worked one Sunday they were going to put tariffs on. He decided not to do it on the Monday. And then he said there was going to be tariffs. And then he put them on, and then he took them partially off, and then he took them off according to some other metric of those who follow the USMCA. If you want to do tariffs, but it's like the gang that couldn't tariff straight.
Suddenly that caused
Steve,
all
you
this
talk-
inflation
but
Jason's
Steve-
talking about.
No
No
tariffs.
tariffs.
Joe,
That's a
Joe,
different
you want to
story.
take economic
Steve, you
policy,
talked
you want to
about
talk about the
all the
future, not
briefing
the
books.
past. Because by
Steve,
the
you
time
talked
you talk
about all the
about the
briefing
past,
books
it's too late.
and all things that you've gotten from people in the past. How successful were all those administrations?
Sometimes they're very successful, sometimes they're not.
But in terms of the waste, abuse, and fraud, and this is a bipartisan issue. Bill Clinton talked about it. George Bush talked about it. None of it ever got done. So this
Bill
is
Clinton
a
did
much
some.
different,
Bill
very
Clinton did
little.
some.
I'm not blaming him. I'm not making this partisan issue. I'm saying that we need to make some serious structural changes, as Rick mentioned. It's going to be messy, but for the greater good.
Let me respond about messiness. Let me respond.
Let's just judge the policy 36 months from now. Let's not do it in real time.
I sat in a 3-hour seminar about deregulation during the Trump administration so that you at home didn't have to, okay? And let me tell you, deregulation is very hard. It's a very important thing for the markets. They really like this idea. About 70 or 80% of the court and legal challenges of the first Trump administration were lost by the administration. There was hope among those who are proponents of the deregulation that he would do better this time. But where are we, Joe? We're in the courts on DOGE. If he wants to reduce the waste and fraud and abuse of the administration, let him go through a process that doesn't create this kind of chaos in the courts. It's already happening. He's losing in the courts.
Take over.
He's losing in the courts.
Rick, the Democrats have decided that, they kind of feel like they're out in the wilderness, that if they lost because of inflation, if they can harp on inflation and that it's worse than it was and it's still happening and eggs are $10 and you said you were going to lower them on it's just it's almost a talking point that they decided is the strategy that they're going to employ to counter whatever's happening right now. Do we know yet that any of this inflation has been caused since January 20th?
Of course it hasn't been.
What we are doing is we have gotten a much stronger magnifying glass since then, and we look at things the way we should have been looking at them for the last 8 or 10 years.
9%.
Because the
Now
seeds of inflation
2.6.
have been planted a long time ago.
Joe, the inflation we have now is some combination of the Fed, Joe Biden, and global circumstances. It is not Donald Trump's inflation. But he needs to look ahead and say, with inflation already high,
Santoli's
will he be adding to it even a few tenths, or does he want to be subtracting from it?
I'm sorry.
I think he
Mike's
should
so
be
nice.
subtract from it.
Mike, do you want to talk, or you can get credit for being on the panel. You don't. If you don't.
Yeah, no, I'm going to punch my ticket either way, but I think what I would love to do is kind of give some kind of way of channeling how the market's looking at this, which is, you know, all well and good. It seems like there's no ability to know, am I lowering earnings estimates for these companies that are tariff exposed or just kind of have to deal with this extra friction or not? Now, I think the market wanted, as I said a half hour ago or so, reassurance that the labor market was in a somewhat steady state going into all this. It more or less got that in the second week of February. I also think it's worth keeping in mind that public sector employment in aggregate, like 8 or 9 times as many people work for state and local and non-federal as federal. So it's not like that's where the mass of jobs are. That's where the money is, frankly, in terms of the fiscal situation. What I think the market is saying is, look, we went down 400 S&P points in 2.5 weeks, and we bounced 15 on the headline number. And so it's totally unresolved, and we're unwilling to extrapolate what we got in this report into the future. You know, is it going to be pain before gain? I think that's what the market is struggling with. Treasury Secretary Bessent, you know, he continues to sound like he's willing to accept a little bit of slack in this economy, or maybe more than a little bit, and the market has to figure that out.
All right, who wants to argue with Steve? Joe, do you want to? Rick, do you? Who wants? Both of you want to go? Who wants to start?
I'll debate. I don't argue. I'll debate anybody.
All right. Do you want to start?
Not surprised.
Raise your.
Well, so again, my point is the
I just think
following.
this is pretty easy.
See,
I'll just
there you
get one
go.
point across. To fix what's wrong with our country, to get our fiscal house in order, there's no easy way to do it. Steve, you can't use 30 years of past rule books. You got to tear them up. Because we've been on this path ever since we let China into the World Trade Organization.
I'm in favor of using 250 years of the rule book of the Constitution that gives the Congress power to spend. That gives the Congress, that gives civil service protections, Joe.
Separation of powers. The courts have been wrong. They're going to get on track.
Well, right now the courts are the ones who are stopping this process, and if you're in favor of getting rid of waste, fraud, and abuse, you ought to be on board of a legal process that isn't overridden by the courts.
It's unrelated, but it's actually very...
Supreme Court turned them down,
It's unrelated, but I think it speaks to this issue, which is...
Do it in a permanent way.
We've been talking about the Bitcoin reserve today, right? That's being brought together by an executive order. What is the demonstrable emergency that you can actually think about that would require an executive order for the creation of a Bitcoin reserve? Honestly, and I ask that not because I'm against the Bitcoin reserve, but because ultimately I think the courts are going to look at a lot of these executive orders and say, and by the way, this is not just Biden didn't use executive orders inappropriately either. But nonetheless, look at it and just say...
I could care less about a Bitcoin reserve. Okay? I care about $38 trillion. That's just a pimple on the hippopotamus' rear end, okay? There's a lot of executive orders I don't agree with. I would like Congress to do their job. The problem is they don't.
Right.
I agree with that, by the way.
The economic uncertainty measures are the highest they've been in decades. Has nothing to do with deficit reduction. It has everything to do with these tariffs going on, tariffs going on, tariff going on, tariff going on. That's not going to help growth. That's not going to help us solve our fiscal problem. So, Rick,
can I just bring Joe in?
Jason's.
I want to get beyond this argument here, Joe.
The tariffs on and off are hurting, not helping.
Joe, I want you to give us. I read you every day, and I think your economic commentary is outstanding. People ought to be reading Joe and his partner Troy. Give us an idea of your outlook here for growth. The Atlanta GDP thing, we all are smart enough to throw it out.
Right.
What are you looking for the first quarter, and give us an idea going beyond?
We're bullish on growth. We think 3% GDP this year could be slightly better because of the productivity trend, which is continuing. Jason's point about uncertainty is correct. There's a lot of uncertainty, but my pushback to that would be business confidence, small business confidence is still extraordinarily high. Much, Steve, will depend, honestly, on what happens with this tax bill. The longer we go into this year, and if you look at uncertainty, I don't think it's the tariffs so much as it is the tax policy. And you see that in the uncertainty index when you look at fiscal and tax issues as basically being at levels we've never seen before. We need the tax bill, Steve. If we get the tax bill, then I think, and get it soon, we can have 3% growth. And if we can get energy costs down, and I'm very optimistic, we were at 80 per barrel in January, we were at 65 the other day. we could get under 60, which I think we can do, we can get inflation down. So we're pretty optimistic, but there are big tails, skewed to the positive, but they're fat tails.
A lot of broccoli, not a lot of steak is really what we've had so far from the administration.
All right. Now I'm even more tired.
Okay.
Thank you, Joe
Thanks,
Lavorgna,
guys.
Steve Leisman, everybody. Mike Santoli. Who else is there? Oh, Jason, and Rick Santelli. Mike Santoli.
We're going to bring in Roger Ferguson to this conversation right now, former Federal Reserve Vice Chair, CNBC contributor. Your first reaction to these numbers and perhaps the way you think both the White House could react, since that's now a sort of new component to this, but then also how Jay Powell may react.
So look, I think these numbers are a bit of a relief, and as the panel's been saying, in that they reflect a certain kind of normality. You know, a little bit of softness perhaps on some of the unemployment numbers, but I think nothing to worry about. You know, I think the White House, if they were wise, would say, you know, the unemployment rate's still roughly at full employment. The numbers don't look like they're feeding into inflation, so a check for them. I think from Jay Powell, a little bit of the same. You know, worried about the economy softening. This doesn't necessarily suggest that just yet, but nor does it suggest that the average hourly earnings are going to be driving inflation. So I think for everybody, this is a, you know, so far so good relief kind of number, but much more to come given the kinds of uncertainties and policy moves that we're waiting to see.
Well, that's what I wanted to ask you, Roger, though, which is the uncertainties that Steve Leisman was just reflecting. When you start to think about what were the kinds of numbers you think we'll see next month and the month after, what does that portend?
Look, I think we're definitely going to see a higher unemployment rate. I think obviously the federal job numbers is going to go down, which will have some impact on government numbers overall. But I think this has got to be one of many numbers to look at because the labor force out of Washington, D.C., as somebody pointed out, is not really the thing that drives the economy. I think there are much bigger issues. So this number will be one that feeds into the broader context of, you know, is the economy slowing? There's some concern in the Beige Book of that. You know, we see some risk of inflation expectations getting higher. So I think right now we're on the precipice of trying to decide which way all this is going. You know, hopefully better growth and lower inflation, but not yet certain. And obviously some of the things that the administration might do could exacerbate both sides of that question. You know, we could have higher inflation from tariffs, and at the same time have tariffs slow down critical sectors. So I think at this stage, it's a wait and see, and it will unfold, and now I think we'll resolve some of the kerfuffle that you just had on the panel.
Let me throw one other ingredient into that stew, which is at some point we're going to have a big debate in this country over taxes. I imagine may even start before the summer in earnest. How does that relate to the uncertainty that you're describing?
Look, I think it plays into the big fiscal question. So, you know, a lot of focus on getting our fiscal house in order. I think what they're going to discover is it's hard to do that with just one side of the equation. I think it's going to be hard to get the fiscal house in order focusing just on current expenditures. We are going to have to think about new revenue. I don't think tariffs are going to generate as much revenue as the Trump administration hopes. And so I think taxes on corporations and individuals are definitely going to have to be on the table more than the administration wants to admit in order to get the fiscal balance. Not consistent with their headline message, but I think the reality is going to eventually confront everyone that we can't leave taxes off the table and think that we're going to cut the federal government and raise tariffs enough to deal with the imbalances that we've had.
Great, Roger Ferguson, thank you for your instant analysis. We'll talk to you soon.
Thank you.
Up next, we'll get a look at what's moving in the market, in the pre-market this morning, and make sure you catch White House trade advisor Peter Navarro. That's this morning on Squawk on the Street. He's got reaction to the jobs report. Squawk Box will be right back. All right, the futures have bounced around a lot this morning. Right now, it looks like the Dow futures are off by about 65 points. S&P futures down by 4. The NASDAQ indicated up by just about 5.5. Let's get over to Dom Chu. He's got a look at the morning's pre-market movers. And Dom, I guess you should be looking at this morning and then kind of thinking what we've seen over the course of the week.
Sure. Just to kind of give you an idea, let's frame this around the intraday action, if you will, around that. So if you take a look at the way that futures, Becky, that you just mentioned are shaping up, we're now kind of largely lower, marginally so, but I want to kind of show you the intraday chart right post jobs report to show you just how much volatility there was and then how things have kind of collapsed a bit here. For the S&P 500 futures picture, we did shoot up, you can see here, just around the number, and it went up markedly so by about 40 points on the S&P 500 futures picture before kind of settling down to where we were lower than what we had just before the numbers came out. With regard to the interest rate complex as well, the 2-year note yield, which some view as a proxy more for Fed policy in the future, you can see a 3.9% move here. We did see a slight move higher, and now the rates have moved lower to below where they were before the jobs number came out. And then to put the volatility picture in focus as well, S&P 500, the VIX index, the CBOE volatility index, right now 2485. We did see a move lower. It was just around 25 just before, and then has moved lower and then kind of crept up a little bit. The number seems to have taken a little bit of the volatility out of the market. I will also point this out, guys. The long-term 200-day moving average of that volatility index, just about 16 to 17. So we're still elevated. We'll keep things posted. I'll send things back over to you guys.
Okay, Dom, thank you for that. What a day. What a program.
Ooh.
Lots and lots and lots of news between Scott Besson, the jobs number, and the food fight.
Do you have more to do?
And all of that.
I'm going to go take a nap.
Have a great weekend, everybody.
I am. I'm going to nap.
We'll see you on
Good night.
Monday. Squawk on the Street begins right now.
Partay tonight.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are a bit mixed on February jobs, up 151,000. The 50th consecutive month of job growth, but the work week, news cycle lows, and U6 underemployment, biggest jump in 5 years, 10 years still below 4.25. And that's where our roadmap will begin. Payroll growth coming in a bit less than expected. S&P coming off the worst day of the year so far.
Plus, Broadcom is the best stock so far in the S&P this morning. The AI boom, of course, leading to a strong sales forecast. But it's a different story for Tesla. It would be on pace for its 7th straight week of declines. It's already down 35% just this year.
Let's begin with the jobs number, adding to this volatile week for stocks. Earlier this morning on Squawk Box, the Treasury Secretary, Scott Besson, offered his take on market behavior and the economy.
We're trying to get rates down, and could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked, and we've become addicted to this government spending, and there's going to be a detox period.
That was the headline for most of the stories, Jim, the detox period. President calls it a disturbance. He called it an adjustment.
I think that the people I deal with in business are saying it's fluid. Fluid's got this nice, non-pejorative word. It's just, you got to be ready for anything. It's rope a dope. But David, last night, I said that we are now in the Clubber Lang phase, though.
Okay.
The prediction, pain. And when you have a prediction, pain, then you're going to get what we have, which is that everything's mixed. Even when we get a number, a series of numbers that I actually liked, we can't keep the game.
No, forecast. Because forecast calls for pain.
Yes, forecast calls for pain. And next week, I expect to start hearing about auto. I expect to start hearing about Europe, and I think it's going to be ugly.
Although the jobs number was not that ugly.
No, I'm saying that it was viewed as good.
Yes.
And then subsequently, people say, I'll sell. They shouldn't be selling. The number's good.
No, right.
But I'm just saying that everyone.
But you just said the forecast calls for pain.
Well, I'm saying the president is giving you a forecast, and then he's making it happen.
Mm-hmm.
The president's applying pain. Look, Secretary Besson basically said, "Hey, you know what? This is an adjustment." Now the adjustment.
Secretary Besson has been a theme for him in terms of leading with we want to get interest rates down, leading with I'm focused on the 10-year yield. He's been saying that numerous times, leading to actually some to believe that. Again, there is not that big a concern for a decline to a certain extent if it can actually be accompanied by a decline in rates, which conceivably then will put us on a more supercharged level to have the economy grow, perhaps into the midterm elections.
Right. Well, now people are starting to talk about, look, can he get all this done by the midterm elections? I mean, I think it's a continual process.
Yeah.
Carl, when I look at what the president wants to do, I just say he's not focused on the stock market because he has bigger issues. And the stock market's not that big. We're focused on the stock market because it's what we do for a living. Most of his comments send stocks down. Maybe you get, say, the Mexican. I read a lot of publications from Mexico, and they're very excited because they're saying. She's got report clothing.
Do you read them in Spanish or English?
I get a translation every day because of all that business I got down there.
That's true.
I'm always trying to figure out what's really going on. And there's just like approval rating of 80%.
Yeah, she's compared to our president.
You want to stop China? We'll stop China. You want soldiers on the border? Boy, that's good for us. I mean, she is someone who obviously has figured out how to have constructive engagement. Now, Secretary Besson was talking about what went on with Zelensky even this year, and it seemed like that was the textbook of how to have non-constructive engagement. It is interesting to see a technocrat. Sheinbaum's a technocrat. She's not someone who is a firebrand, and but she's loud. She's approaching it very businesslike, and I think that was what was expected by President Trump. Like, look, let's make deals. And she said, okay, let's make some deals.
Well, it's one thing to make a deal. It's another thing to make a deal and then change your mind about the deal in, 2 days?
Well, that's the biggest problem with our market is that the inconsistency is just a nightmare. I mean, I'm so glad I'm not Jim Farley or Mary Barra, because they wake up every day and they're saying, well,
Hello.
Canada yes, Canada no, and I got another
Hello.
month, but maybe I don't have a month. I mean, these are big companies, big CEOs, and they are not being... they're being surprised every day in a way that I would not think possible.
We had Brown Foreman on yesterday. He's like, look, you guys know more than I do at this point. The story, in his words, seems to change every day. And
looks like my Discord is down on my main computer.
Costco last night.
Look, I have not had Kirkland vodka.
I got my laptop on. How's it
Every
sound?
bit as good as Tito's.
Won't have a screen up.
Okay, the price is very low. Kirkland vodka. Remember, they do $4 billion. In
Might shut down my computer real fast.
Total Wine and More, they do $8 billion. Right. But I'll have Kirkland vodka. You come over to my house.
Sure.
And they have these cans. They have those pre-made drinks.
Yeah.
You won't know the difference. I'll serve you one of those. Why do I have to go spend a lot of money on
Tito's? Not a vodka
Tito's?
drinker. Sadly, I'm a tequila drinker.
Well,
and by the way, is tequila is it in or out under the USMCA, Carl? Do we know?
Is it compliant? I don't know. Do you know?
No, I mean, you don't
Tell
know.
me.
No,
This is actually a
I
serious
said all
issue.
I have all our agave juices in Texas, but I don't want to pick tire.
Is tequila MCA compliant?
We don't know.
It's a simple question.
Oh, right.
We don't know.
Costco's is $9.98. That's viable compliant.
And that's part of the problem that Carl just raised, and why you're seeing these
We don't
reactions
know.
in the stock market as a reflection of as businesses try to figure out what does the landscape look like. And to your point, Jim, you're trying to plan. You're trying to make capital,
you can't plan.
capital allocation decisions, and you can't really do
No,
it.
I mean, we run the Palenque round the clock in order to beat the tariff. That's where you make that skeleton. Like you put these big pinas in. David doesn't.
Which was a great question from Andrew with Besson, and that is, if you are a CEO and you're thinking about investment, do you wait to find out if this is for good and a new level, and then you can make a move, or you wait to find out it'll eventually roll off and then make your move? That's the behavioral side.
Oh, there we go.
Really big problem.
Now we're up.
Like Costco. Now they're thin margins when it comes to the customer, but they have this great, they had huge growth in the card where the money comes from. They import a lot of vegetables, and they're not having problems because they're powerful. You got to be powerful. Walmart is powerful. This is about scale. The companies that are dealing and making and dealing right now in the fluid situation are ones that have scale.
Very
They can say,
strange.
guys, look, you're not gonna. We're taking your profit margin.
Hello.
Because we don't know what's going to happen. So it's going to come
What the
out of Europe.
fuck?
And that's what Walmart can do, and that's what Costco can do. I mean, I don't know about the other guys. I feel bad for them. They're at the mercy of this craziness.
Yeah. Not to mention if there's some merchant who makes things in Mexico on Etsy trying to sell them in the U.S. How's that going to work?
It's bad.
Bad. Yeah.
Pain. No, I don't think people understand. Like, let's say you're 20 times what we're trying to do. My wife with this Fosforo. Do you keep it there? Do you move it over to Texas? Do you find a warehouse? Do you work overtime to bring it in? This is just one industry, but the tequila industry is a gigantic industry. Now, I mean, there's autos, and autos are premier. But when you look at what, if Claudia Sheinbaum thinks that China is wiping out their textile industry, and she decides to put
tariff on China,
then I think President Trump says, okay, look,
Meanwhile, China is
Mexican beer.
I mean, again, Mexico, Canada, but China's obviously 20% now. That is the big focus eventually, and April 2nd is looming when we're told we're going to get a lot more detail, if not the actual specifics about reciprocal tariffs. But again, a lot of uncertainty between now and then, not to mention when that date comes and whether or not we get clarity in terms of what tariffs will be on all of our trading partners, or whether it's going to simply be a moving target.
Well, look, I think when I listen to you guys, I just say, why would I ever make a decision?
You can't hear me now, though.
Right, fine, but that's not good for business. Uncertainty.
IPOs,
Did I say I think he must be listening to me in some sort of like voice box, like when someone like a bad guy's talking to the cops.
Disguised to protect the innocent.
It's bad for business.
Okay, well,
and therefore stocks are going lower. Now you have a Broadcom, and
Broadcom.
Was it you yesterday? You said that you would take Octane to the bank. That was you, right?
No, that was you.
There you go. I just needed to hear it from somebody because my wife's
But I did set you up for it. I will say.
Oh no, you teed it off.
I did tee it off.
No, you teed it off.
I said, here it is, Jim.
No, you have to have a perfect quarter in order for your stock to go up. It has to be perfect.
There was a great moment with Besson where he was asked about the Trump put when it comes to stocks, whether there is such a thing or any kind of pain threshold that would trigger a
Can you hear it now?
policy. Here's what he said.
President Trump takes in a lot of information every day, and stock market's part of it. That again, as somebody who was on the other side for a long time, and you say, oh, where's the Trump put kick in? There was no Trump put. Well, there's no.
Hello.
The Trump call on the upside is if we have good policies, then the markets will go up.
Yeah,
Testing.
That call.
Testing. Testing.
There's not a lot of upside, so you want to write the call.
There isn't?
No.
How about a 3-year call? Can you do that? I don't know.
Long-term call? I don't know what premium would be. Look, I'll tell you where you want to buy. Europe is fantastic.
The new acronym is MEGA. Make Europe great again, as we have the biggest 4-week inflow to European equities in 10 years.
You know what's incredible? And then Michael Semblas has a piece with JP Morgan. He's obviously always the best. And he's talking about, maybe pulling out NATO, 90,000 troops. See you later. I do think that the Germans are expanding. Germans are doing what we did. In 2009.
Narrative change. I mean, Europe has just been this moribund giant that can't get its economy growing at all. Germany's been in a deep recession.
Well, that's
and now suddenly what? It's all off to the races?
No, they've decided to do. They're doing anything they can. They're doing the bazooka.
Overly deregulated. They've completely wiped out profits from so many important businesses. They haven't innovated in years. They have nothing when it comes to AI.
That's the Swiss and the cuckoo clock. What are you doing with a third man there?
They can lever up.
Yeah, that's the point. They took the break off, and they're levering up, and they're going to put a lot of people to work.
And they do a lot of debt capacity.
And they're going to hire a lot of
under-leveraged, so to speak. If they were a company balance sheet, we'd be saying.
Well, they have to do a lot of
2 times, and they can go to 4.
Munitions, a lot of,
B of A today
spend the money,
says
right?
it's quite possible that the German
Can you hear me?
10-year Bund out yields us.
Yes, and I think it is, and the money's flying there, but they're borrowing. And I've got to tell you, I think a lot of people came into this year and they were caught the wrong way. They were caught U.S. equity. They were caught, Magnificent Seven. Now they realize that, holy cow, it's at the end of the Magnificent Seven when there's really just a couple of guys, only 3. That's where we are. And the bags, just ping it over there. Now, David's right. It's like, give me something to buy. Well, no, don't make it. Don't make it. Just buy the index. Just buy the index. Like I do here. Remember when everyone bought the small cap index and the small caps were doing badly and then they gave up everything? Well,
You were wisely averse to small caps, which is
that's
now.
why they paid me the big bucks.
Yeah.
But I will say, you do not want to compare our markets to theirs. I like Spain here.
Banco Santander.
Banco Santander. I think that Anna Boutte is the greatest banker on earth. She's also the best golfer on earth. She did everything.
Every day.
I'm jealous of her. Hit a truck a mill or two. Jealous of him.
I think I know somebody else who might be jealous of her. Her name is Lisa.
When we come back,
She befriended my daughter when she was teaching English.
We'll get some more movers, including Broadcom. Jim mentions it rallying 10% this morning on the results and the guidance, the AI revenue. We'll get to Walgreens, Micron, HPE, Gap, Mobileye, Palantir in a minute.
Can you hear me? You two, room? Having issues right now. Can you hear me in here? Can you hear me now? I can't get no voice on my main one. Hello. Hello. You can't hear me now? Nope. Can you hear me now? Okay, I'm going to shut this down and I'll be right back. See if that has an issue. Yo-yo. I'm going to log off YouTube. I'll be right back.